My name is Mardochee Lewis, and I'm an accountant. I own MGL Consulting Group. I've been an accountant for a total of 12 years, but I've owned my company for 8 years. Pretty much like Jim was saying, I have an immense background in accounting. I started my career at Ernst& Young, also worked at Deloitte, Markham, worked in private equity, asset-based lending. Also worked for Prudential in their financial reporting and accounting. That was my corporate career, but like while I was in corporate, I was kind of working on my business on the back end, tax preparation, bookkeeping, accounting, tax planning, that type of stuff. So I am an IRS enrolled agent, okay, EA, okay. So what that is pretty much makes me a tax specialist, okay, in individual businesses and tax representation. Okay, and I work with entrepreneurs and business owners on a monthly basis, also non-for-profits, just doing bookkeeping, accounting, tax planning, pretty much giving them clarity on their numbers. And essentially, I also do tax preparation as well. So I work with individuals as well at tax at the end for tax time. It's a busy time now, so I'm still busy now, accepting new clients. So if you know anyone, I'm accepting new clients. Some entrepreneurs, they keep track of their own information. I pretty much advise them periodically, or I tell them, hey, check in with me, because I'd rather them check in with me because I'm going to be the one doing the tax return, and I'd rather them give them advice and let them know what they got to do. And some people, they hire me to do it for them, because maybe they have too much volume or whatever the case is. Okay, so today I'm going to talk about bookkeeping best practices and what you can do with your bookkeeping. Okay, so so the first thing you want to focus on is your business plan, right? So the business plan, in the business plan, you'll have your projections, you'll have like your business overview, the services you're going to provide, your budgets, right? You're going to identify who your key people are, who your attorney is, who your accountant is, who your insurance person. Also, maybe if you achieve certain milestones, maybe sales goals, what's your plan, okay? Because if you don't spend and invest on certain things in your business, then you'll be paying Uncle Sam. So you want to make sure, okay, once I get to this point, maybe I need to spend this, or I need to do this, or whatever the case is. So all that should be in your business plan, and your business plan should be updated annually. I've seen some business plans that haven't been touched in 5-6 years or in a long time. Unrealistic projections. You want to basically update that information. Especially if you've been in business for a long time, year after year, you have real-time data now. Every 3 months, every 6 months, there's things that are different in your business. Maybe you have different initiatives. Maybe you're focusing on social media. Maybe there's a new person you want to work with. Maybe there's a person in the chamber that you met that you want to work with, but maybe you can't afford them right now. Maybe you put that in your business plan, okay, something like that, right? So now, based off the business plan and how much income you expect to make, right? You will determine your business entity, whether it's an S corp, LLC, C corp. How many investors you plan to have. Do you plan to have a unlimited amount of investors? It really depends. So that'll dictate, whether you become an LLC, C Corp, S Corp, or non-for-profit. It depends on your initiatives, right? So you want to document that. And now once you determine what your business entity is going to be, now you go and register with the state, right? The state that you do most business in, right? So if you do most business in New Jersey, you register in New Jersey. If you do it in New York, register in New York, and so on and so forth, okay? So now, once you register your business in the particular state that you mainly do business, right? You want to make sure you get all your business funding, right? So even the business funding, that can be in your business plan, whether you're going to get loans, business credit cards, your business bank accounts, grants. You want to get all this information, right? And to kind of put that in a centralized platform, right? A lot of people like to use QuickBooks. QuickBooks is like the Nike of bookkeeping softwares. You have other softwares like Xero and other stuff, but it's very important to have everything centralized into one place so you can, create these reports, now make decisions based off of these reports if the information is accurate. So, bank statement is just a piece of the equation, right? A lot of people ask me, can I just give you my bank statements? Well, the bank statements is like raw data. It's only a piece of the equation. I don't know, it doesn't categorize anything. Also, I don't know what your liabilities are like. I don't know how many ownership draws you've taken. There's a lot of information that's just not there. So it's just raw data. So if you give your accountant bank statements, he still has to do work, right? It's not like he takes it and he could just analyze that. Like he has to manipulate and do this and that, talk to him, this and that. It's not that clear. You want to have some type of financial statements that gives you a clear indication of what you should be doing or communicating, okay, this is what I did for the year, you know what I mean? Or insurance or whatever the case is, or networking events, or if you're wasting any money anywhere, right? If there's, certain things that maybe recurring subscriptions, you're not even using that subscription, or maybe there's a networking group that you're paying for and you're not even going to the events, it's like a waste, so you want to make sure you're capitalizing on everything, looking at, like I was actually working with a client last week, looking through his sales. He thought he was going to make a certain amount of money from someone. When we look at the data, we look in the QuickBooks, they actually missed a payment from a month, and that was like $12,000 for him, so I was able to, but if he's just looking at the bank statement, he's thinking that he's good. But like actually having someone look at the numbers, it actually gave him more clarity, and he was able to follow back up and go get that $12,000. You know what I mean? But that was actually prior to he hiring me. But I was pretty much looking over his 2024 numbers. I was able to put together, okay, who are his top customers and how much they paid him per year, and I clicked into it, and then it breaks down. Okay, 41,000 summed up. What's the line items, and it was missing money. You know what I mean? So. It's very important to have some type of centralized file. Also, it's important not only to have it, but to put it to use. Hire somebody that knows how to use it, or you learn to use it. Some people don't have the time, maybe you don't have the skill set. It's really all depends. So some people they do it themselves. Some people don't. So whatever the case is, it's very important to either do it yourself or have somebody do it for you, because it gives you that clarity. And if you're not satisfied with the way you're doing it, you probably need to hire someone to do it, okay? Just to give you that clarity and just say, okay, this is how much money you're making, expenses, and also, can you look anything up at any given time? You should be able to look up any given transaction and stuff like that. Also, periodically, you should be saving your documentation, okay? Okay, you should be saving your receipts, okay? So the general guidance from the IRS is that anything above $75, you should be saving the receipt. But if you have like an organized system, like a bookkeeping system, $75 or less, they don't really care that much, but you can use your discretion. I always say, if you can save a receipt, save it, right? But if you have a lot of volume and, you want to focus on like threshold, right? That material amount is generally $75 or more. That's the general guidance, okay? You want to keep track of that information, right? Keep track of your receipts, save your bank statements periodically. How do you bill, right? Do you bill out of Stride or certain type of platform? You want to make sure you save those reports as well, because it has a lot of details on those reports that you can utilize. You want to save any reports you utilize to bill, right? Some people use bill.com and stuff like that. And like, if I'm doing bookkeeping on your QuickBooks, it just says bill, it might have like $9,000, but that $9,000 is like, 10 transactions lumped into one. I won't know what it is unless you give me the billing statement, or the billing report that breaks it down. So saving that on a periodic basis, any deposits, checks, if you pay sales tax on a quarterly basis, you want to save your sales tax returns. Pretty much you want to keep all your documentation on a centralized file, a centralized place, that if you ever need to go get it, if somebody asks you, you can go get it. Of course you can go to your bank online and download your bank statements any given time, but you want it in a centralized place where you can just go get it easily accessible, okay? You want to have maybe tasks, quarterly tasks, daily tasks, weekly tasks, if you're going to be doing it yourself. These are tasks I go with my clients on a regular basis, saying, hey, are you covering this? 1, 2, 3, whatever the case is. Okay, like checklists. Okay, and based off of that, at the year end, after you do all of these things, right, you keeping track of all this information. Now you have real data, right? With this data, you should be able to make decisions. Okay, maybe you're making a certain amount of money. Now you need to change from an LLC to S corp. Maybe you need to, do whatever. Maybe you need to hire someone. Maybe you need to add some type of social media person. We're meeting all types of business owners here that could possibly help us in our business. So you can make those decisions. So that's really it, I think. And then also, once you do have those numbers, you could make decisions, update your business plans, right? So I think a good time to update your business plans is January, new year, new me, all this stuff, kind of self-reflection type of thing. And then yeah. So I'm not sure if you have any questions. Nina?
Over the years, I've heard different numbers. How long do you need to keep your records for
I would suggest 7 years. I would suggest 7 years. The longer, the better. A lot of people, they just want to, I don't want to keep it. Just keep it. I have every tax return I've done since 2013. So, you know what I mean? Like, you can keep stuff for 7 years. You know what I mean? I got stuff from 2013 from everybody. So, you know what I mean? So yeah, 7 years. Okay, some common deductions a lot of people always want to know, right? Utilities, okay? Get like a mileage tracker on your phone, okay? Stuff like this automatically tracks it. Like, like I drove to a place yesterday, I got $35 just for driving an hour, okay? Mileage, utilities, software subscriptions, rents, these networking events, marketing people, your accountant, insurance. A lot of things are deductible. If you go to meal, like these one-on-one connections, make sure you save the receipts. Some people have Easy Pass, some people don't. If you're paying tolls, get the receipt. Just try to think outside the box and try to put everything in a centralized place. Don't commingle, okay? Be mindful of your personal expenses. Sometimes you might pay for stuff cash. You might save stuff in your personal account. Be mindful of that. Try to get out of that. Try to keep enough in the business account. Try to use the business account as much as possible. If not, if you're going to be using other stuff, just try to find a way to, I got to put it there. I got to, you know what I mean? So try to keep it as centralized as possible, okay? And then hire a person that you can meet on a periodic basis. If you're not good at this type of stuff or you need clarification, whatever the case is, I'm accepting new clients if you need that type of stuff, or just work with somebody. It's a lot of people just ignore their finances. They literally think that just because they're making money and then they get surprised and they, oh my God, you ignored it all year. You can't say, oh my God, because it's February, you're coming now, but where are you in November, October? So you gotta be proactive. Okay, and then not be surprised. I always do my token slogan is "Welcome to America." I always tell people, you didn't know the rules. Welcome to America. This is the rules living here. You got to this, that, the other, whatever the case is. So okay. Any other questions?
You can a lot of business on your cell phone. You can write off your cell phone bill, or how does that?
Yes, you can. Yeah. So the thing is, you have to determine the personal versus business use. If it's like a mixed use, or if you have like a separate line. If you have a separate line, you write it off directly, or if you have like one phone, you kind of have to like business, use your discretion. So yeah, and then you have like call logs and stuff like that, so you can always prove that type of stuff. Any other questions?
If you're audited, can you be asked for documents that are older than 7 years?
Depends on what it is, what you're being audited for. So if you're like excluding a certain amount of income, like I think it's like 25%, then they could always audit you for a certain time period. Also, if you don't file a tax return, they could always audit you. So if you don't file a tax return, so moral of the story is, you just want to keep your tax records, stay tidy, don't take any risk. And if you do anything if you're not doing that, you're just taking a risk.
Do you have any recommendations on S Corp versus C Corp versus just like a pure partnership structure?
Yeah, for sure. So that's a good question. S Corp is limited to 100 investors or less. So if your plan is to have a substantial amount of investors, especially investors with a lot of money, C Corp might be your best bet. But the only problem with a C Corp, you get double taxation. C Corp is the only business tax return that pays its own tax, and then you have to pay tax again on your personal tax return. All the other businesses, partnerships, S Corps, are flow-through entities. S Corps don't pay taxes themselves. You may have to pay a fee to the state, but you don't pay taxes as an S Corp. It flows through to the business owner. So if you elect C Corp, you just have to understand you're gonna get taxed out the wazoo, but you have the investors, unlimited investors. As opposed to S Corp, you would elect S Corp status if you're gonna have 100 investors or less, and you make a substantial amount of income, more than about like 50 or 60, not substantial, but like mostly like 50, 60 or so, and then you want to become an S Corp, because if you remain LLC, you're gonna get taxed substantially because it's self-employment tax, which is 15.3%. Okay, so pretty much to avoid a substantial tax bill as an LLC, if you don't have any deductions, you would elect S Corp status. Okay, but the thing with the S Corp is that you should be doing some type of bookkeeping, because if you make more than $250,000, okay, you have to report a balance sheet. And a lot of people, when they do they're doing like the deductions, they just worry about income and deductions. Income and deductions. That's an income statement. Well, if you do more than $250,000, you got to do a balance sheet. have you been keeping track of that? You know what I mean? So now you haven't been keeping track of a balance sheet. So if you make more than 250,000 as an S corp, you should definitely probably hire an accountant because now you got to do a Schedule L, which requires a balance sheet. And then now LLC is like the basic base. Like pretty much, if you're like a newcomer, you're gonna report on a loss every time. You don't have any employees. You could just do an LLC because it's like, So pretty much, yeah, hopefully that explains stuff. But pretty much, S corp to save on taxes, LLCs for beginners, C corp is if you gotta have a lot of investors. Yeah. And then partnerships like LLC, same thing. It's just you have more than one person. Any other questions? I know it's a fun topic. Right? It's a little.
You would have loved my father.
Oh really?
Yes.
Oh really? He's a numbers guy?
Well, so my parents were married in 1950.
Right.
After they both passed, cleaning out their house, my father had every tax return filed.
Oh my goodness.
1950 to
Oh my goodness.
2007 when he died.
Oh.
Everyone in year order.
My goodness gracious.
So, talk about saving documents.
Yeah, different time.
Yes,
Different time.
Different times.
Oh my goodness. All right.
All right, Mardochee, thank you.
Yes, thank you.